Hey everybody, it is Saturday, November 29th, 2025, and 2:31 p.m. here in Orlando, Florida, 7:31 p.m. UK time. And as you can see today, I give you a little bit of a different view. You can see those lights reflecting in the window. Those are not UFOs. Those are lights, but it is about 22 degrees centigrade here in Orlando. A bit gray, a bit overcast. We are coming out of a bit of a cold spell. You can see the leafy, I don't know if that's a banana tree on the right side blowing in the wind, and that deathly terrible fencing job across the wildlife area, looking pretty poor, looking like it's ready to fall down. Good gust of wind. But anyway, yeah, so welcome. Thanks for joining. It's Saturday today, of course. Thursday has been a little tricky because of some personal things I have going on in life, and I'm usually pretty transparent about things. And unfortunately, my significant other mother is having some health issues, and I've been trying to be more with her to deal with those things, which just run over into a Thursday. So I'm doing the streams on Saturday for now. Yeah, Saturday. What are we going to talk about? First of all, please subscribe. If you haven't hit that thumbs up, please do that. Let's get that out of the way. And by the way, Thursday was the American holiday of Thanksgiving, where all Americans give thanks for many, many different things that they're thankful for, and they eat a lot of food. It's a very, very big holiday here in the U.S. I think it's something to do with the Pilgrims. My American history is very poor. I do not know much about Thanksgiving. I think it was something to do with the Indians, maybe the Pilgrims. Maybe you know more than I do. But they eat a lot of food, and they have very, very traditional foods, which are somewhat similar to UK Christmas foods. They eat turkey on Thanksgiving and ham on Christmas. We ate a lot of food, and we ended up cooking from 1 p.m. till about 8 p.m. It just went on for hours, and then by the time cooking was done, we didn't really want to eat because we'd been picking away. So we actually didn't really have a Thanksgiving dinner, which is funny. But how ironic is that? But anyway, we have a lot to give to be thankful for, right? 2025 comes to an end. I mean, health is everything, right? If we don't have health, then you don't really have anything in life. It doesn't matter how much money you have without your health. Money is insignificant. I guess maybe the money can help you in times of poor health, but I'm realizing that health is everything. Health and time, right? We spend a lot of time chasing after wealth and material things, but at the end of the day, good health and spending time with loved ones and family members and whatnot is probably really what life is all about, because at the end of the day, when you're in your deathbed, whatever you have in your ISA or your peer-to-peer lending account is going to be absolutely insignificant. I mean, your kids are going to enjoy it if you leave it to them, but for you, it's not going to mean anything. So, yes, very thankful. Anyways, I'm thankful for you showing up here every week, and thankful that I'm able to give you some entertainment, if nothing else, on a Saturday evening when the nights are very long in the UK. The daylight is short. Maybe we need some things to entertain us. Anyway, quick hi to everybody. If you're watching in the future, please subscribe. Paul is here in Kenilworth. Mr. Paul Bagworth, 1136. Peter Vincent, 1855. I hope that's definitely not the year you were born, right? Leatherhead. Chimpo Naughty in here at Cambridge. Dave Dawson is here. And Paul Ward from West Palm Beach, Florida. Welcome, Paul. Not too far away, about 2.5, 3 hours south of where I am. Nice to see you here. We are going to talk about some peer-to-peer lending things today. We're going to talk a little bit about London House Exchange, and a new offering they sent out, which is really interesting to me because they were one of my original investment vehicles that has not been a good investment, but yet they continue to offer products which are a little bit, I would say, convoluted, because they really stand to benefit the investors of London House Exchange. What is that noise? I don't know if you can hear that. Somebody's outside doing something. So we'll look at that offering, do some catch-ups with some of the platforms. I did look a little bit into Landlord Invest. I know I've been asked about that, what is going on with them. And I reached out to Philip from Landlord Invest. I haven't heard anything back yet, but I'm hoping to get a bit of an update on what's going on. I'll give you my thoughts on what I think is going on and what's going to happen. We are going to take a look at what happened in the markets this week. Kind of a rebound, right? We had a pretty dismal few days in the stock market, and then we had this big rebound, business as usual. We'll take a look at the Trading 212 portfolio. That has definitely not rebounded, but I'll show you what's going on with that. And we'll talk about the budget. Of course, some pretty significant things inside the UK budget release, how it affects you as far as ISAs go and investing, things like tax on dividends. So let's get right into it, shall we? Yeah, we should. I think so, yeah. Let me do a little screen share here. That's pretty boring. Let's go straight to this. The money platform. I know some of you are money platform investors out there. They said that they had a really good November. Lending momentum stays strong. November lent funds 1.67 million. It's quite a lot. Number of loans written 3,000. Forecast gross returns 2025 to 2026 is forecast at 16.9%. That's pretty good. Now that forecast return is gross, right? So that is before fees, losses, and taxes, and tax potential cash drag. Now, I wanted to go in there, and I'm not an investor in money platform. Mainly, I just don't have that extra capital right now to deploy enough to be properly diversified. But I just wanted to look at their statistics page and see, what they're offering over there, which is really interesting. You can certainly see as time has gone on that the default rates, as expected with this type of lending, are going to sort of be bouncing around a little bit all over the place. So you got 7.1%, 7.8%. So if we take a look at year-end January of 2025, gross return after losses and fees. Look at this, 2025. This is 2024 to 2025, 29.9%. That is kind of crazy. Net return, though, this is the more realistic right here, 9.5 to 11.6%. And then your default rates, 14.2%. So you can see here, default rates delinquency rates have gone up quite a bit from, say, 2023 to 2024, 11.7%. So the gross returns do look very nice, but after you factor in delinquency and whatnot, you are going to be more in this range. I think 10% is a good range to expect going forward. I don't think you're going to see 16%, but who knows, right? Who knows? This year they're saying forecast for 2025 to 2026 is going to be 5.1 to 6.2, which is a little bit lower than last year's forecast. I think if you could get 10% with the money platform, you'd be doing well. But just remember, you do have to diversify. I think you're going to need probably 10 grand minimum in there to diversify properly. Just because of these default delinquency rates, if you're at a 15.4% delinquency rate, you're putting $1,000 into, you've only got 2 or 3 grand, you put 1,000 into 3 loans. You just happen to hit one to go delinquent. That's really going to affect your lifetime return rate. So just be wary of that, because these numbers do look good on paper, but Just make sure you have enough money to spread out over multiple different loans. I forget how much the minimums are there. Maybe one of you can remind me. I think maybe 1,000 if I'm not mistaken. So I think you need at least 10 loans to really diversify yourself properly in that. They continue to make a lot of people happy who are investing. I know a couple of financial thing readers who've got high 5 figures in money platform who are extremely happy, which is cool. I get it. But if you are a smaller lender, you do have to be wary of what's going on there with the delinquencies. Let's look at this London house. Let me see here. Okay, so they sent out London House Exchange sent out a newsletter saying they are launching a new mortgage bond on Riverside House, offering 7.25% variable on a extremely low 17% property-backed loan. The existing mortgage now on a rolling term carries a high 7.4% rate, which is variable, by the way. That rate, I think, once started in the 6% range, so it's definitely gone up as interest rates have moved around. Certainly hasn't gone downwards, I believe. And what they want to do is have you, as a London House Exchange investor, provide money to them. They're going to take that money and pay down the mortgage, pay it off, save themselves about 0.15% interest, and put themselves in a better position. It is ISA eligible. I mean, it seems on paper, right, that this is not actually a bad deal. 17% loan to value is very, very low. So I wanted to go in and just kind of take a look at this offering and see, is that something to be worth looking at? Now, for me personally, I'm not touching anything London House Exchange anymore. Been burned by the poor performance of my investments over many, many years, and history is everything to me personally. Again, not financial advice. You should do your own due diligence, but historically, if something has performed badly, and I've not done any of these mortgage bonds at all, never touched them right from the beginning, but my share experience on having shares in the properties has been really poor. So for me, I don't care if it's a loan to value of 1%, I'm not doing it, because if there's any problems with the situation over there, which I don't know if there is or not, it's great getting 7.25%, but at the end of the day, if there are any issues, it's going to take a while to get your money back. So if it has to go through some kind of legality things, or the units take time to sell, which is one of the investment cases here. So you're getting 17% loan to value. The loan size is really small. It's 115,341 pounds. Now, the interesting thing about this property is that the 5-year time frame where investors decide to vote whether to keep this property or sell it, 93% of people voted to sell after the 5 years, and that was 2023. So 2 years ago, and that property has still not been completed. So that means that there are units still left. I think there's maybe 2 or 3 units still left in there that they haven't sold yet. So it really dragged on a long time. And the other thing about it that, and let me find the information. I know it's on here because I just highlighted it. There's the risk. Where is hold on. Let me log in because I'm going to show you. Hold on. Gotta remember the login information. Yeah, this is the information page that kind of gives you the overview of what the offering is. You can see here current mortgage rate is 7.4%. It's going to go down to 7.25%. Now, this is the important information down here on this right side of what the mortgage bond is. Interest payments are rolled up and paid with repayments of capital from unit sales, right? So let me share the screen. That means that you're not going to get an interest payment every month. You're only going to get paid once they sell the remaining units inside the property. Mortgage bond expiry, when sufficient units are sold to repay bondholders in full. Okay, that's a little confusing to me. So term, it says 12 months in parentheses and brackets targeted. So this thing could drag on for longer. I don't know how long it would drag on for, but 2 years later, they still haven't sold all the properties. There are no fees payable directly by LHX investors. 1% of the total amount raised is charged to the borrowing SPV, so there's going to be a 1% arrangement fee. There's going to be a first legal charge on the remaining units. So, it's not really ideal, right? You would want, as a bondholder, it's not like you're getting 10% or 11%. You're not going to get paid every month, so you don't quite know when you're getting paid. That's not really ideal. But if we look at the, let's find it in here. Hold on. That's the name of it. Riverside House. Come on. Here we go. Let's take a look at the details of the property. One of the annoying things about this, if you were still a shareholder, you've really not done very well with your shares to begin with. I think they're down, I think they were originally 70%. You can see here, 93% voted to sell the property in, that was 2023. You go back in the history, you can see here. There's also a deficit of cash in the property, so it's in the negative right here. July, okay, it seems to be rising. So 31st of October, there's a net cash deficit of 35,000, and that has gone up. You can see down here it was as low as 4,000 a year ago, so that has been rising. That's not always a good sign. Okay. 14th of March 2023 was when the votes happened. Sorry, no, was it? Okay, 1st of March 2023 was the 5-year. But you can see here, look at the original purchase price shares, 73.7%. Now, fair market value of the shares that people own in this property is 44.4%. Sorry, 44.4p. So 32.7% in the negative. It's not been a good investment. That's been one of the heavier losses on London House Exchange. So I don't know. And the reason I'm bringing this up is somebody asked me, would this be a good place to put some money because you're getting such a low loan to value? I would say for me, no, it's not. But you have to do your own due diligence. I don't like the fact that this has gone. The share price of this has dropped 32.7%. That means the liquidity isn't great. The valuation of the property has dropped. Yeah, not great. Not great. You can see their bids and offers are there. There's a little bit of money available. Yeah, London House Exchange, I really don't know what their game plan is for this business, because once everybody has voted to sell all the properties, does the business then continue? I have a feeling, how could it? Didn't really have anything new to offer. I'd be concerned too that is the business being able to survive financially through this liquidation process of all these properties? Personally, I wouldn't touch that investment or anything new coming from London House Exchange just because I have a bad taste in my mouth. It hasn't been great. Why put your money in something where historically has not been great? Maybe there's some of you out there that have done really well flipping shares on their trade market. I don't know. Have you? I was never one that bought and sold shares. I didn't have enough time to do that, but maybe some people have done well. I would put it out there that probably a large percent of people have not done well, have probably either broken even or maybe made a couple of percent over years of having those investments, but it just hasn't been great. Look, and here's the thing. With investments, I'm not mad at LHX because at the end of the day, we have to take responsibility for one's own actions. I chose to invest the money. I take the responsibility and accept the fact that it wasn't a good investment. It wasn't a good choice on my part. I didn't know. But and I'm not going to say it's their fault. Maybe they could have done things better. Maybe it's just the property market went bad. Things decreased in value. Good case in point is to people who always say real estate property is the way to go. Well, a lot of their properties have gone down in value and negatively. So, real estate is not always 100% given that you're going to do well. So, yeah, but ultimately, when we make our investment decisions, we have to take responsibility for that. Good, for the good and bad. Say, lesson learned. It wasn't a good one. There's been some good companies. There's been some bad companies. As a whole, you just try to hope that you throw some darts at the board and some of them hit the 20s or the 180s or the 60s, the triples, and some of them are just not. You're going to hit the ones. So there you go. Or miss the ball completely, as I did when I was a child, and I hung my dartboard up on one side of my double garage door, stupidly left the right door open, went way back, threw a dart, and went flying past the dartboard, through the open door into my dad's classic car, and stuck there with made a hole in the body of the car. So sometimes the darts miss. There you go. Moving on, because I ranted for way too long. What's going on? This is House Martin's update, November 2025. I think this might be the first time that I've seen in a while that they said, we didn't bring a new property to the platform in November, but activity remains strong behind the scenes. Our next supported living home, originally scheduled for this week, has been delayed slightly by Golden Lane Housing. Will launch next week. I think that's, when did I get that? 28th of November. So next week they are anticipating releasing a new home. Macro backdrop headline: CPI falling to 3.6%. Interesting. Talks a little bit about the budget. We're going to go through that. Property pipeline. So they got a few things going on. So if you're a successful and happy House Martin investor, you have probably some new things coming up in December, January of next year. Crowd Property sent an update. I think their weekly roundup is a little bit of a ploy to make you feel comfortable about Crowd Property. So they're showing you what's been paid back. Hey, all due respect to them, they paid back £1 million on that Chorley loan, $465K in Lanham. I can't even read. Like, how do you even say that? Welsh. Rewal Chapel, Fjord, Rewal, Lenarman. I'm taking that's Welsh. They paid back $642.5K in Bexley and $178K in Suffolk. And they've also funding new properties this week. Actually, several new properties with some more coming soon. So they continue to have activity, as much as I know some of us are a little bit disheartened by Crowd Property, but they are continuing to put out activity. And I think that's a really good indication. When you see a company stop funding activity, then you start to become concerned. But Crowd Property is still continuing all of this activity. So respect to them. This is very interesting. It was alternative credit investors have not really had any peer-to-peer lending news, so that kind of shows you state of the market. But there was a interesting article about SME lenders warn of growth challenge from the UK budget, saying mid-sized businesses, whether the budget is going to support growth and encourage borrowing. And I think SMEs are, if you look at like peer-to-peer lending SMEs, there just aren't that many of them anymore. Yeah, a few out there, but it seems to be this alternative credit now is the hot word of the year. like private equity, private lending. In fact, if you go to the homepage of the Alternative Credit Investor, all you see here is more funding lines being created by these big companies. Look, $1 billion Deutsche Bank, euros, 125 million facility, 50 million here. I don't even know where they get all this money from. SME lending is extremely risky, but there doesn't seem to be a lack of these companies that are, have these private credit funds, like 400 million euros here, 67 million here, 100 million Albatross Lending Group. It's crazy to me. These numbers are huge. Very little talk about peer-to-peer lending on here, but there you go. Let's move on. Going quickly. Statistics. Landlord Invest. Yeah, so I wanted to talk a little bit about Landlord Invest. What is going on with them? Obviously, they paused lending a while ago, 2024. And you can see right now that the loan book is relatively small. So in 2024, this was ending 31st December 2024, £793,000 loan book. So in my mind, as little as I know, but with a small loan book like that, it's very hard for a company to make money. And especially if you look at the previous years where it's just 2021 was 2.3 million, 2022 3.5 million, and then it dropped 1.6 million, 2023 down to 793. So obviously it's going down. Hard to make money when your loan book is decreasing. Looks like everything is being sold off. I don't know. I don't want to speak from any knowledge about Landlord Invest other than what I've read. It looks like they are either pivoting. Philip is pivoting to some kind of a new business plan, or that form of lending of Landlord Invest is just going to not exist in its current form anymore. I'm not a landlord investor myself, so I don't know what's going on in the back end if people are getting money back or not, but it doesn't look like that's going to continue in its current form. And maybe Philippe will send me an email and let me know what's going on, because I just haven't really had the lowdown details on that. And he's been on the stream before. I think he's being cautious about what he says because of the FCA. We'll see. If I have an update for you, you will be the third to know after Philip, myself, and then you. Let's see. Let's see if there's anything here. Fourth Way reported that Invest and Fund has stopped providing data and access needed for a risk assessment, and the evidence points to a shift away from peer-to-peer lending. They wouldn't be the first. This seems to be the way of what is going on with some of these smaller peer-to-peer lending companies. That's the demand's probably just not there. So they've stopped providing data to Fourth Way, so they will no longer be rated on Fourth Way. So I think they were a 3+ or 4+ rated company at one time. Let's see here. Yeah, and I was asked, I got a couple of emails this week. I didn't print them out because I was being lazy. But people were saying, peer-to-peer just seems dead. What's going on? Should I just exit now? Just to repeat what I said last week, peer-to-peer is quiet. And Fourth Way and I, Neil, talked about this. It's certainly not this big expanding space of new growth and new technology. It's sort of like the boiled egg that has been cooked. It's sitting in your fridge. It's not going bad. You could still eat it. And I think that's the way it is right now. I think some companies are still good. But when I go to the peer-to-peer independent forum, and I look at the activity here, this is a great litmus test of what is going on in the industry. And some of these threads are pretty quiet. Our friend Chimpo Naughty is quite active, I noticed there. But it tends to be pretty quiet. Even this post from, when was this put up? November 14th. Fresh funds for peer-to-peer. It has been a while since anybody posted on that. Actually, that was way before November 14th. November 14th was the last time somebody posted. There's just not a ton of activity in the general discussion. You have some activity in the different threads for the companies themselves. In fact, you can look up, let's see where you find the Landlord Invest thread here. Is there one? Where are you? I know there's one on here because I saw it before. Here we go. Landlord Invest. So even here, not a ton of activity that's going on. A few loan updates and repaid loans, but it's just generally really quiet. And there was a article on Peer-to-peer lending's next era, which was a partnership, so these things are paid. They're definitely not unbiased. This was Cufflink. And they paid. They were talking about how the peer-to-peer industry can grow, saying we'll give people what they want. Broader range of products. Technology, blah, 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 clear proposition. Peer-to-peer lending is not simple to access. That's true. And I just did a general search, right? And I think education is one of the downfalls of peer-to-peer lending. If I do a search right here, UK peer-to-peer lending, I'm just seeing a lot of old articles from 6 months ago, some from 2021. Right here, there was the end of peer-to-peer finance in December 8, 2021. So I did a little Reddit search, and it came up with this thread, and this is in the UK personal finance subreddit from 3 years ago, saying, is peer-to-peer lending worthwhile investment? I'll be coming into some money, 70 grand, looking for ways to invest low or no risk. Well, first of all, you can't get zero risk on any investment. If you put it in the bank, you still have some form of risk if the government decides not to pay you out when the bank goes bankrupt. But people here are saying it's pretty risky at the best of times. If you want low, no risk, peer-to-peer is not for you. It's just kind of negative sentiments through all these comments that people saying, well, it's very high risk, loosely regulated, no FSCS protection. That's not strictly true, because if you have money in the client bank account, that is FSCS protected. So you have to be careful what you listen to. This guy says, oh, geez, please don't. I got into money thing in Lendy a few years ago, 25 grand down the toilet, bunch of scammers. Basically, element of risk. Now this one, again, pure, I think, just incorrect information. This guy Frog says, I use Zopa and Rate Setter, which were good at the time and gave good interest with low risk as I saw it. They're gone now, effing over the investors. I don't use peer-to-peer. It's not worth it. Well, first of all, Zopa and Rate Setter paid everybody back. So they were one of the few companies that no longer operate that did not F over the investors and did right. Yeah. And this guy says, did they F over the investors? Got all capital back, right? Yes, that's true. And then he just says it left a sour taste in a lot of mouths. I don't think Rate Setter left me a sour taste in my mouth. Lendy did. Rate Setter didn't. They paid back all the money. How could you be bad about that? How could you be mad? So all these people just saying, no, don't do it. High risk, don't do it. And then a couple of people said loan pad, yeah, is okay. So I think that's just the general sentiment, right, is there's no innovation at the moment. The good companies are still continuing to do well. They're the boiled eggs that you hope don't go bad. And I just don't see it really growing much at the moment. I'm not sure what changes. I think it's education, right? In that Cufflink article, they were saying review websites. And while review websites are good, they don't really show the whole picture of everybody. There's just so many different things that go into these peer-to-peer lending investments that don't equate to a really fair review sometimes. Because, for example, if I'm a London House Exchange investor and I never invested in the shares and I just do the mortgage bonds, I'm going to have a very different experience to the person buying shares like me that went into the negative. So it's quite tricky to do review sites on peer-to-peer lending. It's complicated. The terms and conditions change very fast sometimes. So difficult, to say the least. So I think stagnation right now is the word I would say for peer-to-peer. My biggest investment still is with LoanPad. In the 60-day product, I just move it to the classic account because I need access to funds to pay some taxes when they come due. But, the ones that I'm with, I'm comfortable with, but I just don't see any real innovation, which is a shame because, man, it was so promising. It was so promising back in its golden days of when things looked good, and now it's just stagnant. Trading 212. Take a look at this. Look at this. 25,542 pounds. We have lost 17% in a month. So there you go. This is the risk. This is the risk of investing. You could lose money. Imagine that, right? Imagine that. You could actually lose money in stocks. You can see our net deposits are 8,077 pounds total. So still obviously have done very, very well with the portfolio, but took a bit of a hit. We had a bit of a rebound last week. Was it Wednesday? Wednesday and Friday were decent. MicroStrategy came back just a touch. Gave us a little ray of hope, right? A little ray of hope here. Not much. Just a little ray of hope. And then right here. And then kicked us in the ghoulies and went back down. So that's still 47% in the red. We're 77% in the green. NVIDIA took a bit of a fallback from here. 200 down to 177 on discount. So you could pick up some NVIDIA for a discount of about 10%. Amazon, decent week. Look at that, 6% on just Amazon. Tesla, 7% last week. Iron, 12% up last week. Enbus, 12%. Photronics, 8%. And Cipher Mining, 45% in the last week. So Cipher Mining had a pretty good come back up. That's crazy, 45% in 1 week. But on average, everything has been, look at this, Rocket Lab, 5% up, but down, still down 33%. Yeah, so we're still getting a little kicked with these iron shares being down 11%, Embus 23%, and then Rocket Lab 33%. The big one, Strategy, down 47%. So not really much we can do at this time. I don't think it's the time to cut and run at this point. So no cash to put in, no additional funds because I spent it all on dog food. So 25.5K. We already gave money to charity, so we gave money on 31,000. So I think I gave 1,000. I gave 1,000 to charity out of the portfolio, which is cool. Super happy to do that. Which you can see here, look at this. Look at the S&P 500 is back almost to all-time highs. All-time high right up here. 6,900, we're at 6,849. Even after that terrible week, which felt terrible realistically, it was just a blip. It wasn't really not that bad. Look down here. 6,500 back to 68 in a week. That's retail investors saying we don't see there's a problem out there. We're happy to continue investing. And when in doubt, all you do is you just zoom out. You just zoom out. Look at that 5-year chart. All the way from down here. 3,697 points in the S&P up to 6,849. So $3,000. So doubled. It doubled in 5 years. If you manage to get the bottom of the market. So, yeah, it's okay. Let's look at the budget. We had a question. What are your thoughts on the new budget ISA changes? This is from Chris. I was surprised about the ISA cut. Interested to hear your thoughts. My niece called me up. She was very upset. She's, oh my God, the UK, the chancellor's cut the ISA from 20,000 to 12,000. Oh my God, what do you think? What am I going to do? And I said, well, you obviously didn't read the changes because it was just a cash ISA cut, which I thought was really weird. You know, they say in the news it was to encourage people to move away from cash ISAs and to invest in stocks and shares. I feel the same way. I always encourage people, don't keep too much money in cash. But having said that, you're kind of punishing people who are getting closer to retirement age who maybe don't want as much risk, and they like the cash ISA because it gives them $20,000 a year that they could use all of that or part of that and have some relative safety. If you invest in things like gilts and bonds, you don't necessarily have as much safety as you might think because of the price of the overall NAV or the stock price. Like on an index tracker, Vanguard's bond product fell quite a lot and hasn't really done much as far as increasing. So for those people taking away £8,000 of that ISA allowance if they wanted to use it in cash, I think that really sucks. And I think this is just another example of the government making weird changes that, you know, it's very odd for the government to be pushing people to invest in stocks. Don't you think? I think that's really odd. Saying, well, invest in private companies. Yeah, so that was very odd. I totally was against that. I think people let people make their own choices, right? Don't push them into doing things. Offer both. If you want to invest all of it into a peer-to-peer ISA, you're welcome to do that. If you don't, you should be able to invest in the cash. And I think it's just annoying. I don't really understand. Well, I do as politicians, and they're so disjointed from what's going on in the real world. They make decisions and they don't really think about how it affects your person on the street. But if we look at the key points, I'm just going to go through a couple of interesting key points here. It was long. Of course, taxes are going up, right? It says tax thresholds will be frozen for an additional 3 years from 2028. The point at which people start paying higher taxes will be held. It means earners will be dragged into higher tax bands when they get a pay rise. That will raise supposedly $8 billion. So and by the way, they're trying to fix the budget problem, right? Which is completely unfixable. Let's have a look. Let's see how much the UK owns right now. Okay, 4.3. So this has gone up a lot. This used to be in the 3.7 range. When the last time I looked at this clock, I think it was probably 6-8 months ago. It's been steadily rising. You can see the U.S. here trumping everything, no pun intended, 38.3 trillion. Mr. T was supposed to fix that problem, never did it. So the UK's national debt is now just so problematic that it's unfixable, right? Raising $8 billion is not going to fix a 4.3 trillion pound problem. Yeah, fun stuff. I digress. Anyway, taxes hiking on gambling. Gambling industry is going to be taxed to raise more than $1 billion. Look at this. Remote gaming duties rise from 40% to 21%. Online betting tax rising to 25%. The bingo tax is being abolished. How did that happen? Do people even play bingo anymore? There's going to be a tax on mileage on electric cars. That sucks. But that's not going into effect for 3 years, so that'll probably just get changed at some point. Changes to capital gains tax for employee ownership trusts. Reduced from 100% to 50% for capital gains tax relief, so that's going to hurt. This is the big one, I think, right here. Other tax hike. The tax on dividend payments to shareholders as well as property and saving income will rise 2 percentage points. So that's going to hurt landlords. You want to pay more tax as a landlord. You're going to get taxed more on dividends. There'll still be that threshold that you get 1,000 tax-free, £1,000. Depending on your income too. I think it's like 12K. If your income's lower than 12K, you don't pay anything, I think. So that's going up. That's going to hurt more. As the UK just continues to raise taxes, I think the UK is becoming one of the most taxed places. Right? The government will scrap the 2-child benefit cap from April 2026. Salary sacrifice pensions contribute above $2,000 to face national insurance. There you go. That's going to be more taxes. There's going to be a state pension increase. £440 a year for the basic state pension. And an increase of $475 per year for the new state pension. Yeah. There you go. There's the ISA. Savers will only be able to put up to $12,000 into cash. ISA's tax-free each year. This is reduced from £20,000 in the hopes that Britons will instead invest their money in stocks and shares. Over 65s can retain the full £20,000 allowance. At least they did that, right? And when I talked about it, I said approaching retirement. So if you're over 65, I mean, maybe you're 55 and retired. I don't know. At least they kept that part. It's the least they could do, right? Fuel duty frozen, mansion tax. You're going to pay $7,500 on mansion tax if your property's valued at $5 million or more. Oh, and by the way, this mileage on EV, how do you even police that? How do you police how much somebody's driven? I guess that's self-reporting, right? You think anybody's going to be really, maybe you can. Maybe the MOT, is that how they'll tax it? Maybe from the MOT. They still do MOTs? I don't know. I was wondering how they would track how many miles you've driven in your EV. So I get the thinking on that is electric vehicle owners are not paying tax because they're not buying fuel, so they should pay their own share of taxes. Do you agree with that? I'm not sure. I don't know. I don't think so. I mean, if you use electricity, you're paying tax through electricity, and just paying it a different way. Why should you have to pay 3p for every mile? I mean, I guess it's really not that much. If you drive 5,000 miles a year, you're paying like 150 pounds. So whatever, but still a tax annoyance. Anything else interesting? The average energy bill will be cut by £150 from April by reducing levies. That's going to cost money. Luxury cars removed from the Motability scheme. This scheme, which provides subsidies for people with a disability to lease a vehicle, is part of PIP. Schools. Freeze on student loan repayment rate. The student loan repayment threshold will be maintained for 3 years. I think inheritance tax. There you go. A change to inheritance tax will allow the transfer of 100% relief allowance between spouses. Yay. And rail fares frozen for the first time in 30 years. with passengers not paying any more for season tickets, peak return or off-peak return tickets between major cities. Okay. Oh, all this stuff. 2.6% of your gross domestic product is going to be spent on defense. How much is that? 2% of 3.7 trillion. So it's like a 300 million. Is that right? 900 million, something like that. What, 850 million? Yeah, okay. The government of Northern Ireland will get an additional £317 million, 505 million for the Welsh government, and 820 million for the Scottish government. How are you going to pay for that? Yeah, anyway, fact is you're going to get taxed more. Nothing is going to get any cheaper. And cost of living is going to go up. So, there you go. Government is not really helping us out much. Interesting article that came out I wanted to tell you about. Pension fund covering scores of Minnesota USA Catholic schools has an £800 million shortfall. Listen to this. The Chicago-based Christian Brothers pension plan has informed the schools and dioceses, is that right? That the fix will be costly. Some are pulling out worried about the plan's future. I can't read this because they won't let me read it. But the crux of it is, let me see if I can pull it up another way. Because I want to pay to read your article. Sorry. This is the annual pension contribution would have to quadruple to fix this problem to an untenable 1.5 million. You know what they did? They traded options on using the retirement. Crazy. It doesn't talk much about that in the news story, but what I do know is that they took significant risk using a pensions funds, and they didn't do well. They lost a bunch of money. I'm sure there'll be lawsuits flying about this. But the point in this is if you entrust your money into the hands of a professional, you too could experience things like this going on. And who would think that a school's pension fund would lose 800 million? How can you even do that? How can you lose 800? You can lose it by gambling. This is what they did. They gambled the pension's money. Options trading. When you have a pension fund, you don't invest it in options. You don't trade options. That's just crazy to me. So be careful when you're investing through a professional or a financial advisor who is picking your funds for you, picking your stocks, because they can make mistakes. I mean, that's a very, very costly mistake. This is why I say learn how to do your own investing, DIY. Invest in index trackers. Invest in whatever you're investing in. Learn to do it yourself, because only you are going to care about your investments the most. A professional will not. A professional cares about getting paid. Okay? So you need to learn about what you're investing, whether it's index trackers, Tesla stock, or Bitcoin. Let's look at Bitcoin, by the way. Look at this. We've had a run-up. Things were looking dire. Bitcoin was declared as dead. Down to 82,000. Even lower than that, I believe. Back to 90,000. So 10% in one just period of a couple of weeks. 1 week. So yeah, whatever you're investing in, make sure you understand it. And I really do believe that nobody is going to do better than you with your own money. The Chicago people have, case in point, shown us that, yeah, Scary. 800 million. You're not going to get that back. That really screws those people that have paid into that pension for decades. Not understanding. See, they didn't understand what they were investing in. You see the word pension, right? Pension is a word that I think most people think is safe and trustworthy. And they took a piece of their paychecks every week or every month and said, we're going to put that in the pension because pensions are safe. Pension for a school is, I know I could trust that. This is why you have to understand what you're investing in. Whether it's through a pension or doing it yourself, you have to understand it. Because if you knew what options trading was and you found out that your pension was going to be gambled on the stock market and high risk investments, that you could lose, a lot of your money through that pension, you would, if you were a smart individual, say, I'm not going to put money into that pension because that is stupid. That's stupidity. And those people who did that to the pension fund, they have a lot to really answer for because they're going to be in some big trouble. Anyway, rant over. Let's see if you have any interesting comments. Philip is not involved very much more with Landlord Invest. Maybe try co-founder Joe Valenda. Okay, thank you. I will pass on your best wishes. Chimbo notices there's been lots of activity on the peer-to-peer independent forum recently. Interesting news and discussions. Maybe I'm not seeing it. Hot Topics Quadus, Rachel from Accounts, Budget Speech, Cufflink, Crowd Property. Who is Rachel from Accounts? Is anyone using land? That was another article that Fourth Way put up about land. Crowd Property have moved offices. Okay. Are you going to talk about Cufflink? Withdrawal pending for more than 1 week. No new properties available. Go live dates being extended. I mean, none of that is good. No, I did not have that on my list. Probably should. Is there discussion about this? Look, I'll be honest with you. I don't read all of the threads because time. But let me see what's going on. I haven't tried to withdraw anything from Cufflink for a while. Let me see what people are saying here about Cufflink. That's 2025 June post. My previous withdrawal request made on the 12th of November, the money arrived next day. How long have you been waiting? So I made a withdrawal on Friday 21st, still waiting. Like you had previously been paid the next day, we'll chase tomorrow. People saying it varies. My last withdrawal was put in on the 7th, paid out on the 11th. Yeah, I mean, that's not good. I would say what is happening is that it's like a run on the bank, right? You get a lot of people who race to withdraw money because they start to get nervous. Cufflink can't handle that. Things go slow. Don't really know what's going on behind closed doors. Two things. They could just be backlogged with the amount of withdrawal requests they're getting. It's concerning that they haven't released any new properties. That's not good. I think that's a great litmus test of what's happening at a company. They're not releasing new deals. That's certainly not good. And so two things, right? It could be completely overwhelmed with the backlog of requests. Who knows what their staffing is like at the moment? Or number two, there's a problem behind closed doors that we don't know about. and they don't have the money to pay you out. That's not good. I don't know if that's the case. I'm sure I will not know. When Narinda left Cufflink, that was when I sort of put the brakes on and thought, watch out. And I said this back then. I like having an in with these peer-to-peer companies. I like to be able to contact people and say, what is going on? And usually most of the time they'll tell me. Right now I don't have that in. I don't know the CEO, but I think we'll have an announcement due to what's going on. We'll see. I don't know. Stay tuned. But it's never a really good thing, right? Those things are not good. When you've been used to years and years of everything happening as you would expect, you make a withdrawal, you get paid out, and things change, it's not good. Dave said it's a quiet period. He's talked to Cufflink and they said it's a quiet period. Not convinced. Dave, I got all my loans paid back from landlord investor, lost just one loan, lost a small percentage. That's good. The only loans are either in default now or overdue. I think I was lucky getting out at the right time. Bye-bye. Sorry, just had to ban somebody that was spanning about crypto wallets. Capital Stackers has been good. Altering the cash ISA limit is not going to get people to invest in stocks and shares. 100% agree. The government are just out of touch. Yeah. So yeah, just going back to that car, like how do you know how much somebody's driven in a year to tax them? And Dave says they're thinking of doing it on the MOT for mileage, but you don't have MOT for the first 3 years. How are people actually going to accurately report how many miles they've driven a year to pay tax on it? EV road tax is a lot less than my petrol car, so the 3p per mile will go some way to equalizing what each user pays towards road infrastructure. Okay, but I guess a counter argument to that is the government gets a lot of money from other places. Look, we are taxed out of our rear ends, and there's a lot of abuse in government as to how they spend money. So while I agree with that in some ways, I also think just the wastage is so crazy. That's what Mr. Musk tried to do in America, is to look at the waste and say, can we just cut that down, right? Can we cut down the waste? And he couldn't do it. And he said government is broken. It's the same in the UK. They should have plenty of money. But they don't, because they mismanage. Altering the cash size to try to encourage investing in stocks and shares for the average person may not go well for the majority. There's also such a lack of education, right? So if you're pushing somebody away from cash to stocks and shares and they don't know anything about investing, are they going to lose their money? Lack of education. But I think it should be their decision, though. I think you should give them the same $20,000 and invest where you want. Don't tell them where. Rachel from Accounts is the chancellor. Got it. I did not know that. Oh, I gotta tell you, like, whatever you think about Elon Musk, the electric car has been the greatest vehicle I have ever driven. Absolutely. Ooh, so good. It's if you have a place to charge an electric vehicle, and it makes so much sense in the UK. It makes less sense in America, even though the charging infrastructure here is phenomenal. I mean, they're right 5 minutes down the street from my house. If I needed it, there's 20 fast chargers. But if you can plug a car into your garage, wake up in the morning and have a full charge, how could you not like that? And they're so fast. They just instant acceleration. It's. I never thought I would want an electric vehicle ever in my life, until I drove one and saw the benefits. And I was like, wow, there really is something else. It's kind of there's a lot of misinformation about EVs too. People say, oh, what happens when the battery goes bad? Blah 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 blah, stuff like that. And I think, well, what happens when your car engine blows up? It's not necessarily going to happen. Batteries degrade, but they're not necessarily just going to go completely bad. And most people, let's face it, they don't drive 200 miles a day. I mean, my car can go 260, 70 miles in a charge. Most of us are doing 10 miles, 3 miles. In the UK, you're doing less unless you're commuting. You're doing 5, 10 miles a day maybe, if that. So it just makes a ton of sense. Anyway, God, we went way past now. I'm going to get out of here. I hope you guys have a wonderful weekend, whatever you're up to. And thanks again for tuning in. Subscribe, like, all of that good stuff. Check out the Patreon if you're not a Patreon member. It supports. I appreciate your support. For everybody who is a Patreon member, thank you so much. And I will see you next time. Take care. Good night. Bye.